Hey, what's up, social media? We'll be starting shortly here, about 2 minutes. It's almost game time. Hey, good morning, Mark. How you doing? Thanks for joining. Hey, Nikki. Good morning. Hey, Christine. Good to see y'all. All right, so hey, it's 10 o'clock. Let's go ahead and get rocking and rolling. So, the reason for this pseudo or kind of prompt to podcast, and I'm happy to be joined by an absolute expert in this field. Jamie Grimley with TWFG is here to help discuss so we can really sort of break down this FEMA 2.0. As a lender, I have seen a ton of mistakes already being made, and I know if I'm seeing them, I want to make sure that as homeowners, buyers, buyer agents, realtors, sellers, everything, that let's just educate and be as educated as we possibly can on this, because it's not going away from what we look like, from what it looks like right now, right? I mean, it's a deal that it's coming in less than 48 hours. It'll be here. So we want to make sure, because I talked about it on the show this past week, I had so much feedback from it. We want to do that. So just a couple housekeeping things. Let's hold any questions to the end. If you've got questions, just go ahead and type them in. If you're on Facebook, you could type them into the chat right there, or any of the social medias. You could shoot an email to info@mortgagegumbo.com, and then we'll handle it there. Also, if you want to share with your teams, or you're not sure exactly what is going on, then listen, make sure that you are, you can go to Mortgage Gumbo TV. Just go to YouTube and type Mortgage Gumbo TV, or it'll be up on all the media sites as well, because I know people have, see, we got, Chris driving. We've got a bunch of people that are doing this. So, we want to just make sure we get all this information, because, listen, it is a lot. So, with that being said, let me just kind of show you here what the agenda is today. So, look, what we're going to cover is why the change, who's affected by the changes. And I could pretty much sum that up: everyone, right? Is that pretty much fair enough? What are the changes? How to avoid additional speed bumps, and then, private flood. We're going to bring that into the mix. It's something that we've heard about, but Jamie's going to kind of touch on what that is, and then we'll get to you questions and answers as we move on. So let's just kind of jump in here. So again, I appreciate it. Looks like we've got quite a bunch of folks here. So, the PowerPoint is just something that I put together real quick. It's not a life or death thing by any means, because I'm going to be basically chatting through this, okay? So the first thing that we want to make sure is, when I get this to work for me, is what we want to is what are the key changes? All right. So, number one, let me read to you verbatim, okay, why, right? I think it's important as a lender. I always explain why to my clients of what we're doing. It's very, very important that people understand the why. So here's the why. FEMA's updating its National Flood Insurance Program risk rating methodology through the implementation of a new pricing methodology called Risk Rating 2.0. This methodology leverages industry best practices and cutting-edge technology to enable FEMA to deliver rates that are actuarially sound, right? Not actually sound, actuarially sound, equitable, easier to understand, and better reflect a property's flood risk. So, in a nutshell, my opinion, hey, listen, in short, we're raising rates, right? That's what that says. Equity in action means we're raising rates and costs or premiums. So, with that being said, let's get into what the phases are, because some people really aren't going to have to worry about this until April of next year, right? With the phases. So, phase one, new policies beginning, Friday, 10/1, will be subject to the new methodology and any new purchases or refinances, okay? So, basically, what's happening is after October 1st, you're using the new policy. So if something's not closing by September 30th, if it's closing by September 30th, hey, you get to go on the old rating. We were just talking about how somebody benefited, their rating went a little bit lower, right? So now with this, as of October 1st, this is when it kicks in, okay? Most importantly for all of us, look, we're not all the Jamie Grimleys of the world who are doing insurance, right? So that's where the provider that you're working with or the carrier, I think this is where you need to be consulting their expertise when you can, okay? Now, this is also all other phase two is all other policies renewing after April 1st of 22. So, and Jamie, correct me here if I'm wrong. I just want to make sure that we get this to the audience correctly here. So if they've done anything since April 1st of this year, is it on the new, basically, anything on the new, or kind of explain that phase one and phase two?
Okay, so phase one, that starts October 1st. If you want to get a new flood policy, if you're purchasing a house and you want to get a flood policy or need to get a flood policy, it's going to be rated off of the new 2.0 program. If you have a current flood policy that you've had year after year and your expiration date is November 1st, you're still going to have that renewal offer based off of the old system. So people's renewals aren't going to be rated from 2.0 unless you have an expiration date after April 1st. So that's when it's going to be rated at the new methodology system.
Right. So for me, my insurance renews in December 4th every year. So I'm good till April of next year, right? That's when the new stuff kicks in. Is that correct?
Right. So your renewal that you get December 4th, you're in a preferred flood zone X. So your renewal is going to be $572 based off of the old system. Now, this is another side note where if your policy is renewing between 10/1 and 4/1 and you want to see if the new rating system might benefit you, be better than what your renewal offer is, you could take advantage.
Okay.
But if it's not better, then you can keep, your original renewal offer.
All right. So good stuff there. So that's the phases. Now, here's some key changes, and this is where what I've identified I feel are going to be the key changes that are going to affect from the lending side, which then for you as realtors and buyers, if you're already a homeowner and you have something in place, then, it is what it is when it comes to a refinance. But what we're looking at, hey, how's it going to affect our buyers? How's it going to affect us selling a house? How's it going to affect us making from a lending standpoint, right? Those are the things that we want to be looking at. So one of the main things here that I want to push through and make sure that you understand are flood zones are no longer relevant, okay? All homes are rated house by house. So what that means is technology, it's gotten so good that it's coming back to sort of bite us on this one, right? So longitude, latitude, they dial in. Your house is kind of like when you're watching a hurricane, right? Or the tracking map. You know New Orleans is at 30 and 90. So we kind of look at that. Now your house has a longitude and a latitude. It always has. Now it makes a difference. And what that difference is proximity to water. Is that correct?
Yeah, proximity to coastal water.
Okay.
Yes.
So now so flood zones are no longer relevant. And I'll give you an example of that in a second, okay? Current flood premiums will see as much as an 18% yearly increase, okay, until the new premium is met. So, how do we know what that new premium's going to be, right? I mean, Jamie, they call you, you run it, and you're like, hey, here's what it's going to be over a certain time. Kind of explain how you get that new number.
Basically, all I've been able to do so far to just kind of forecast what someone's premium would be is to run it like a new application. Run it as if it was somebody new wanting to get a flood policy at this particular address, and that is going to tell us what the premium would be. Now, their current premium right now could be $600, but in 2.0, because they're closer to the coast, they want them to be at $3,000.
Right.
So that's going to be somebody that would increase 18% every year until they hit that $3,000 mark, where if I'm quoting new business, new application, that's what the premium would be.
And that's why I wanted to make sure that we got in front of you, okay? And I already see some questions coming in that we're going to get to that probably not going to like the answers based on what y'all sending out, but it's important. Here's something else. Repetitive loss is going away, being retired. However, any new claims, you'll be surcharged for anything over the last 20 years. Now, it's not like we're all out there going, hey, look, let's go make a flood claim, right? But in my mind, what they're doing here, and correct me if I'm wrong, they're going to kind of make you better really want to make that claim because they're wiping the slate clean. Congratulations. Everybody's born again. You're all going to heaven, so to speak. Everybody's born again with their flood insurance. Slate's been wiped clean, anything that you've done. But if you got to make a new claim, anything that you've had in the past is going to come back up and is going to affect your premiums going forward. Big time. Big time, right? So, again, they really want to make sure that do you really want to make this claim? Which is crazy. I mean, it really is, okay? Lastly here on this part, and again, these are just major changes that I've identified that's going to affect everybody on here. There's a lot of other stuff that if you get into it, you can kind of read, but these are the major things that are going to affect everybody on this podcast. Elevation certificates have minimum meaning now since FEMA has collected data on the home. I watched Jamie and them run a policy the other day. The person was at a 20.4 foot above level. Didn't matter, right? Did not matter. So elevation certs, doesn't matter if they're a foot above or a foot below. It's not, the elevation cert really now at this point has minimal meaning. Is that correct?
It's still all to be determined. We can't quote everything in our day to try and get examples. I mean, but if you have a house built high up on pylons, you're still on the coast. So you're still going to get a more, of course, higher flood premium that they would want. Now, do they might take into consideration if everything's all open and nothing's underneath it and all of your equipment and appliances are 10 feet up in the air?
Maybe.
Maybe.
Right. Well, and that's one of the things. So one of the things that when you read deeper into this policy, like I have, is it wants to know are appliances on the first floor or above. So basically what they're saying is if your AC unit, heaven forbid, you have a slabbed house, sits on the ground, you kind of get a ding for that, right? I mean, it's crazy, right? I guess they want everybody, somehow, I guess new houses are going to be built with ACs on top of the roofs. So it's crazy. Just like hot water heaters, those old time hot water heaters that sit in that cabinet behind the house, or, you know, in the bathroom, in the laundry room, you get dinged for that versus as if it's in the attic.
Now, how much of a ding?
We don't know.
We don't know. I've of course tried different ways. Yes, of course, all the appliances are located in the attic above the first floor, and I didn't really see a change in the premium.
Right.
So I haven't gotten an example situation
where you're like,
to
hey,
really
here's a
weigh
workaround.
that out.
Yeah, here's a workaround. So let me give an example of the first comment that I made here of flood zones no longer relevant. So let's use I-12 as a factor, right? So if you live south of I-12, hey, you're in flood zone X, right? So you're like, yay. If you live north of I-12, you're in flood zone X. Well, up until 10-1, you were in flood zone X. Everybody was wiped with the same brush, right? Hey, your flood's 572 or whatever that number is, okay? Now, what's happening is they're going to beep on down. They're going to check out my house that is 1.3 miles from Lake Pontchartrain. Even though I'm in flood zone X, in realtors, this is where it's going to be so important for y'all to know going in when you're listing that house, or to know when you're going make an offer for your buyer, is it can't just be flood zone X. That is irrelevant. The flood zone no longer, hey, it's flood zone X, so I'm cool. No, because flood zone X, even though it's not required, my flood insurance, if I want to carry it, even though I'm in an X and the person north of I-12 is in an X, we're going to have different premiums. Okay? We're going to have different premiums going forward. Does that make sense? Is that an easy example there? Mm-hmm. Right? So now, well, hey, I live up in Folsom. I'm good. Well, how close are you to Little Bogachita or Little River of Folsom? Right? Those are then things that are going to come into play. Right? So us in South Louisiana, South Mississippi, I see some folks on here. Look, we read it together, and even the West Coast is being hit. They have a tsunami clause in there, right? So now we don't care about what's going on in Iowa and all that stuff. Who cares? But for us, we got a lot of waterways and tributaries and all that stuff that's around. So whatever they deem that you could be close to it, that little bayou that the kids go catch the frogs in, you know, maybe that's something now that is going to increase a policy or increase an amount, a premium amount. Okay? So I wanted to make sure that way you can sort of get your head around it. Both people in an X flood zone, in a flood zone, but paying two different premiums. Okay? Now, what I want to make sure is this, because I got something from an agent yesterday, and they like, you know, well, hey, they just, you know, we'll just tell them not to have flood insurance. That is what you're going to have to overcome, right? That's going to be the biggest thing, because when you go, hey, X zone, lender don't require it, right? Dwayne, Stein, Mortgage Gumbo, we are not requiring you to have flood insurance. But now, instead of them not paying $572, you're telling them, hey, you're not required to flood, it's up to you. But it's $2,000 without contents and $4,000 with. We've had that exact sample on one of my buyers. So that is a big deal, big deal. So I know everybody's going, well, cool, if they're not in a flood zone, no big deal, right? Well, it is a big deal, because now it's a lot more money, a lot more money. All right, let's get to the next slide here. Whoops. All righty here and freeze. All right. So what I wanted to put down here was just some speed bumps. Okay. And, Mark, we'll get to your question in a second. So was speed bumps, right? So be educated. Spread the word out there. For you personally, listen, and FEMA was smart on this, and this is what aggravates me. They were everybody on here probably is aware, because I've had several agents go, well, I'll just tell my people to go get flood insurance. Well, that's a concern that an agent don't know that flood insurance takes 30 days to go into place. Okay, so you got to make sure that you're understanding how it works. So number one, set bells, alarms, whistles, contact your agent, tell them a month before to start letting you know. Don't let your flood insurance lapse, folks. If your flood insurance lapse, immediately go to the FEMA 2.0 if it lapses, right?
If you need to get a new policy.
If you're going to get a new policy, correct? Okay. Now, when purchasing a home, and I'm not here to tell, look, you realtors are fantastic at what you do. I love working with y'all. It's awesome. But one of the things that I think is going to have to become the norm is now with that, that property disclosure, if you're a homeowner on here, you're looking to buy, hey, make sure that your realtor's getting you and they're able to provide, is that policy in place? And hey, if you're selling a home, my God, you're going to want to let them know that policy's in place, right? I mean, that because that's going to be a huge difference selling that home versus if they got to go get a new policy.
Well, and it could be, especially if you are in the required or used to be required flood zone A, and so you have to have a flood policy, then that way maybe someone can assume that and you only get that 18% increase.
Right.
So
yeah.
that's yes, definitely to me would be beneficial.
As look, we've got rates going up, we've got inflation going up, we've got all these factors right now that when you look at the home buying and everything, that's crazy, right? This is the sort of the roadblock that's getting put into place right now that you go, oh my gosh. So keep this in mind because I see a couple questions, so this may answer it here. Flood zones are still relevant. So in other words, if you're in an AE flood zone as a lender, it's going to be required that there's flood insurance on that property. If you're in an X or a C or whatever it is there, then, hey, we're not going to require it. Okay? We're not. So that is something there that you've got to look at. The thing's going to be is that conversation of how many people go, oh, God, you're silly not to get flood insurance. It's $500 a year. Now I've already started to hear the conversations of, well, if it's $4,000 a year, if I go 10 years and I don't have to make a flood claim, that's $40,000 I saved. If I got to make a $30,000 flood claim, I come out $10,000 ahead. Sure, you're right there. But I just want to make sure those are some conversations there. So flood zones, when it comes to lending, I just want y'all to be aware that is still relevant, okay? The flood zones. Property disclosures, okay? My ideas, what I've seen is on this is, hey, that property disclosure, let's know going in, hey, is it in place? That's going to be tremendous if that's the case, if it's already in place, all right? If it's not in place, and we got to quote the 2.0, we need to see, does that borrower still qualify? Had a $285,000 loan last week that went and showed the property, pre-approved, through underwriting, everything, out looking, looks at it, goes and looks at where it's in a zone that now the premium went up. Instead of it being a $900 policy, it went to $2,400. Then if they wanted to add contents, it was $4,300. So that $285,000, that $300 and something a month for flood alone brings their buying power down to $207,000. So make sure you're getting with your lenders if they're truly, if ever, and I don't care if it's me or not, you truly have to have somebody pre-approved now, in my opinion. So that way you're not surprised. Hey, here's what they're approved in an X zone. Here's what they're approved in an AE zone. So that way you sort of have an idea there, okay? Because what's unfortunate here is they've not improved or increased seller paid closing costs at all, right? So, hey, if you used to get 3% on a conventional loan, well, hey, maybe that paid part of title, part of some different closing costs. Now 3% on a conventional loan, that might eat up just all the flood insurance initially being paid. But they still got to qualify on the amount if they're not in a flood zone that's waived there. Okay? Jamie, do you have anything that you want to add?
Well, on a little bit of sidebar on people that are in a flood zone X, let's go there.
Yep.
And it's optional for them to have a flood policy. It is that it's going to be different address to address, where your generic 572 for the full coverage, lowest deductible, that is, you can play around with that. You don't need to have the automatic 100,000 of contents to have the quote. You can have increased deductibles. So all of those will differ, make the premium differ. You don't have to have the full-blown max coverage. And again, I did one just a few minutes ago up in North Covington. And for max coverage, instead of it being 572, it was 505. Mm-hmm. So that was the first person that I've quoted with all of this that I've seen a benefit. But it's optional flood. They don't have to carry it. It would only be for personal use, or just feel good that you have a flood policy in the event something happens.
Yeah. All right, so let's get into some of the questions that we've got here. Let's go back and we'll start at the top. Yep. Good morning. Blah blah blah. Hey, appreciate that, Chris. Will flood zone C or X be optional? Again, it's going to be the same flood zones, right? As a lender, we're not going to require that. We're not going to require that. Okay. Before we get to explain, because maybe this will come into play more than it ever has. Explain private flood insurance. Let's talk about that, because a lot of people don't know. They just think FEMA. And let's face it, in my opinion, this is a money grab, right? For the hey, they got to make up for all the giveaways, blah, blah, blah. This is a money grab. But let's talk about the private flood insurance and how that works. What is that something now that, hey, as realtors, as a homeowner, you need to be going, hey, tell me about this private stuff?
We have had a few more private markets open back up. Benefit of private, you don't have that 250,000 building limit. So you can go, some companies offer up to $2 million worth of coverage for flood insurance with the private market. You can put replacement cost endorsement on your personal property. You can also add loss of use coverage. So on your FEMA NFIP policies, max limit 250 for building, max limit 100,000 for contents. And it does not include loss of use, and your contents are rated at an actual cash value if you have a loss and you have to make a claim. Now, the private market, I've seen them offering, pretty much any address. It used to be limited, South Shore, very, very hard. But again, it is still address to address on if they'll offer a quote. And some of them, I've seen them, if NFIP is a premium of $2,000, I have a private market quote $4,000 with, same coverages.
Is
so
that credit rating,
beneficial.
Credit rating wise, or is that just, hey?
No, it's no credit rating.
Awesome.
Mm-mm. No.
So that's why I wanted to bring that up. Hey, this can maybe be some relief for all of us as an option, right? Especially for those C and X flood zones where, now you got to sit back and somebody's looking to list their house. They don't have something in place. Now maybe when you go to list that house, you go get a private, get an idea of what a private quote would be on that, so you could at least know and have an idea of what's coming your way from an affordability standpoint. So, Barbara, in relate to that, yes, will still be optional. Absolutely. Amber, so who is now required to have flood insurance? I mean, really, it's depends. If they have a mortgage, then it's going to be whatever flood zone they're in. So in that regard, it's your AEs, your all those zones that that were normally. Nothing has changed when it comes to flood zones. So if you were required, if you were in a required zone before, if you're selling a house that's in a required zone, that's going to be a big deal there. I immediately start thinking, and we're just talking here, but I immediately start thinking about rural development, right? That's probably a program that may struggle going forward, right? That's a program that may struggle. Definitely if they're outside of an X zone. That is for sure. All right, here you go. We'll give you this one. Here we go. I'm in the process of building a raised house on the lake and in BFE. 20 feet. It's going to be 20 feet up. I'll probably never have to make a claim. Well, probably, Mark, there is unfortunate because there's no guarantees, right? But with that being said, probably never need to make a claim being that high. But the mortgage company requires flood insurance. Let's tell Mark what he's got heading his way.
You've got to get your rate of what it's going to be right now.
Yeah.
And then I'd also compare it with a private market rate.
Yeah.
And just to see. And if you can be allowed the max deductibles, or if you don't need contents coverage because you are going to be so high and, you feel that, you'll never flood up in that way, then, that would be more of the avenue that you would want to look into. But definitely, the more you're going to have a mortgage,
yeah,
you're on the lake. You might even be in a V zone. So V zone means not levee protected,
right?
Very coastal, and it's going to be a premium.
So so Mark, basically that dream house that you were building and you thought, hey, no big deal, unless you're going to pay cash for it and play Russian roulette. Unfortunately, it looks like it's going to be, what I would do is get with your agent and then let's find out.
Right, have them quoted.
Have them quoted out for you and see. Make sure they are quoting, and this is for everybody, because I've already spoken with agents who are saying, my insurance agent said, we can use the old one because they're buying the house in October. Now, that's incorrect. That's incorrect. If a new purchase is coming into place after October 1st, believe me, we're scrambling, getting a bunch of loans done on 930 because these buyers don't qualify under 10-1's deal with the new claim. So make sure, if ever, that's why I've got, Jamie as part of...
Assume the seller's policy.
If that's possible.
Right.
In his case, building, he's kind of... all right, so I'm a dual agent on a sales. Seller doesn't have flood insurance. Seller doesn't have flood insurance in a flood zone C. Can he get flood insurance today and make it transferable? No, unfortunately cannot, because flood insurance, it's a 30-day wait. And FEMA was smart. This is what I was alluding to in the beginning. FEMA was smart by kind of rolling this out a couple weeks before. They kept talking about it. Then all of a sudden they rolled it out 2 weeks ago, knowing everybody and their grandma can't go out and get on the old policy.
When are they closing? What was the question?
She's a dual agent. Can they get it insurance today and it be transferable to the buyer?
Well, right. No, seller can't. Right, any new policy.
Over.
Now,
right.
The new buyer can get a policy to be effective on their loan closing.
Correct.
And depending on if they're closing today or tomorrow.
Yeah, it looks like
rate.
this. I'm
but
assuming.
If it's October, it's going to be new rate.
Yep. All right. My renewal is May 31st. Will I still renew at my current rate? So because they are going to fall under May 31st of next year, that is when they're going to get hit for a minimum of the 18%, right? Maybe. Maybe it'll go lower.
Right.
Right.
That's where it's going to be your particular case, your particular address and rating. But May 31st, your renewal will be offered at the new 2.0 rate. And again, if that rate futuristically where they want you to be premium wise is a lot more than where you're at right now, then it sounds like you would be the 18% increase.
Yeah. So for her, she said they're closing on 10/29. So Melissa, for you, new FEMA 2.0 on that one where you're the dual agent.
But a flood zone C, that's where if they want to have a flood policy, have their agent quote them the NFIP market and compare it to a private market.
Absolutely. Yep. And then Melissa also just make sure, well, she said it's in a C, so she's fine. I'll say make sure you get with your lender. All right, cool. Mark said it wasn't as bad as he thought. All right, so we answered that question. You got it, Babs, not a problem. Is there a way to see what the premium for a specific address will be without asking an agent? If I'm showing multiple clients, multiple houses, I hate to ask an agent to run all these quotes. Really, there is none, huh? No, unfortunately, Stacey, there's not. I mean, that's where it's just you kind of got to do it. It's just that simple because, and for you, guess what? By doing that, that could change, realtors, that could change what houses you show, right? If all of a sudden, hey, this one's in this zone and this one's in that zone, does that make a difference from what they qualify for? So it's just, look, it's a lot more on you as realtors of the prep. It's, for the selling agents, not, putting a sign in the yard saying, hey, let's go get it. There's just going to be a lot more in there.
Well, and and on that note, to just kind of be helpful in your research when you're looking to see what to be able to show clients, if the disclosures on those listings don't list I'm a flood zone X or I'm a flood zone A, you can still always go to the LSU Ag Center flood maps and see what zone where this address falls. And if that particular address is falling in an A or AE zone, then feel free to call your, insurance agent contact and ask them to, put a quote together for you so that and your client can be educated on what the costs are going to be.
Yep. All right, so here's one that just came over. Have a listing appointment today in flood zone AE. What are your thoughts?
Get a quote.
Before you even go out there. Before you go.
Now, get a quote, but then also
do they have something in place?
Get a copy of the seller's flood deck.
Yeah.
To see what they're paying, and you can compare to the new quote and see if it could still work, even if they might fall into that 18% increase situation. Right.
So that's going to be important. And realtors, hey, look, y'all the best at go and get the listings and go and do all this. This is something that nobody's talking about, right? That's why we've got so many people on this. And that's why, I've got dozens of questions from the show this past week. And it's going to continue because it's going to have an effect. So this is where you being educated on this and going into that listing meeting going, hey, do you have something in place? No. If not, let's make a call and let's go from there. Let's see. How are you doing a bunch of closings when home insurance companies are not binding right now other than LA Citizens? I mean, we're doing closings all the time.
We have other companies that are binding.
Yeah. So that, we're not going to be held hostage or sit back and wait. So, we were funding loans during the hurricane because we needed to. All right. And then one more here. Great info. In a flood zone with flood insurance, what happens to me? So here's just a basic question, right, for all of us. I'm in a flood zone X with flood insurance. What happens? So in reality, you're going to it's going to depend on when your policy renews. right? But if they're in a flood zone, if you have insurance right now, when it renews, you can expect it to go up at max 18%. It may go down, but you can expect it to go up. If you don't have it and you're in a flood zone X, then you got to get a quote based on the new FEMA 2.0.
Well, I mean that's where he might have been talking about he's in a flood zone, meaning when people I'm not in a flood zone. Well, those are the people that are your X's, C's.
Yes.
I'm in a flood zone. Those are your people that are A's. Okay, that's always been, the deciding factor. So if that text message was flood zone A, you have a current flood policy. After April 1st, when you renew, that's when you're just going to see whether or not you benefited from the rate change and you saw a decrease in your policy, or you'll have the up to 18% increase depending on how you're now being rated under the new system.
Okay.
So that would be.
Yep. So I think one of the things Jamie just brought up, and I mentioned it during, I guess for all of us, even me, I'm not in a flood zone. We're not in a flood zone as far as lenders are concerned. Let's get ourselves into the habit of, hey, what flood zone are you in? Because in reality, everybody's in a flood zone, right? I mean,
Yes.
If you live 30 feet high, which is considered a mountain here in Louisiana and Mississippi, you're still in a flood zone. So I think we've got to retrain our brain on, hey, what flood zone are you in? And most people are going to go, well, I'm not in a flood zone. Well, that's going to be sort of you as the realtor or the homeowner or the buyer or the seller knowing, okay, well, they're probably in an X or a C, right? So that's just one of the things there. So, hey, with that being said, it looks like that's all the questions we've got. If you need any information, hey, if you need somebody to kind of get you some quotes or something like that, hey, reach out to Jamie, the Monarch INS Zadcam, or 985-951-2070. Realtors, if you need somebody to get them pre-approved, we're getting folks fast-tracked within 48 hours of the time that we speak to them. We want to make sure during this time you're not overworking. This is a new thing for us all. So we're all in this together. Hey, as I find out more information, we'll be chatting about it. So, hey, I'd advise you, if maybe you're on YouTube right now, which I see we got folks, hey, follow, check it out. Go to mortgagegumbo.com. Click on The Rue, which is our weekly newsletter, where we cover all these sorts of things. So with that being said, hey, thank you so much for your time. If you got any questions that come up after this, shoot them over to info@mortgagegumbo.com. Thank you. Bye-bye.